Hello and welcome to Next Gen Finance, an SEB podcast about sustainable finance. My name is Lina Apsheva, and today I'm joined by my colleague Gabriella Eriksson, who is a senior advisor in sustainable finance at SEB. Hi, Gabriella.
Hi, very nice to be here.
Gabriella and I will talk about the different types of sustainable debt instruments that exist in the market today, with a focus on what is called performance-based or sustainability-linked products. In addition to this, I have an exciting announcement about a project that we here at SEB have been working on together with the German development agency GIZ and a UN initiative called PAGE, or Partnership for Action on Green Economy. So stay tuned until the end of the episode to hear more about that. But now, Gabriella, let's talk about performance-based products. An important thing to establish before we get into that conversation is that when we talk about sustainable debt, specifically in the context of large companies, financial institutions, but also sovereign issuers, is that there are two types of products that we are discussing here and that we work with. One is called use of proceeds products, and the other, which we will focus on today, is performance-based products. When it comes to use of proceeds, we have actually already talked about this type of products here on the podcast before. Green bonds, which we've mentioned here a lot and which was the first product of its kind, is an example of a use of proceeds product. So before we move on, Gabriella, maybe it's good if we refresh in our listeners' memory what use of proceeds products are. So I was wondering if you could give us a couple examples and tell us what makes these products special.
If we talk about the use of proceeds product, so the idea with that is that you clearly outline what the money that you borrow would be used for. So the focus is on the investments. And the idea is that you earmark the money for green purposes, or it could be social purposes too, of course. But the idea is that you set up a list of so-called eligible projects or assets. And that could, for example, be anything from let's say wind farms or clean transportation solution, fleet of electric cars or perhaps, public transport, or even buildings with, strong environmental metrics with, high energy efficiency. But of course, the list of eligible projects will be bespoke to the individual company or borrower.
These are some great examples of projects that can be financed through use of proceeds products. But Gabriella, does that mean that every time that someone invests in, let's say, a wind farm, it means that it's a green investment?
Of course, environmentally beneficial projects and assets have been financed for a long time. And of course, even long before the green one was introduced, broadly in the market. But an important part of these types of sustainable finance products is the protocol created around them. So there are voluntary guidelines available for some of the key products in the market. And for example, we have the green bond principles, but there are also, green loan principles or social bond and loan principles. And the purpose of having these types of principles is that they provide guidance on methodology on how to go about when creating sustainable finance instruments. You might have heard in this podcast before, transparency is a true guiding star on the sustainable finance market. These types of principles support that. So the guidelines don't tell you what is green and what is not green, but they tell you how to go about when issuing a green bond, for example.
Of course, we always go to the example of green bond because, that is the product that's very dear to our heart here at SEB, I would say. But it's important to also mention that other types of use of proceeds products are social bonds or sustainability bonds. So it doesn't have to be only green. But now that we've established what use of proceeds products are, how about we go to performance-based products? So how do they work?
This is a type of product which is, typically and often called sustainability-linked products. But the word performance-based actually describes pretty well what they are about and the dynamics of the product. So in a sense, this product is outlined around the borrowers or let's say the company's performance in relation to some, chosen sustainability topics. So instead of focusing what the money is used for, the determinant of these products is the sustainability goals and targets of the borrower or the company. And so the spotlight is turned to the borrower's sustainability strategy. The promises that the company makes in terms of improvements over the coming years. So I guess in a way you could say that sustainability-linked product is much more of a forward-looking product, with focus on the transition to a more sustainable future. So I would say it's about the journey to a more sustainable future rather than the investments that you do here and now.
So how do the companies basically apply these goals that they set for themselves in the context of this product?
I guess as a first step, you would start with selecting, one or several KPIs, key performance indicators. So essentially, metrics. And those metrics are meant to be important to you as a company from a sustainability point of view, or, defining the sector that you're in. And it could, of course, be both, sustainability challenges, but it could also be sustainability opportunities. So we often talk about materiality. So, a topic which is material to the company and is of strategic importance. So let's say, for example, if we as consumers want to buy more sustainable or sustainably sourced products, then it becomes important for that company that produces these products to make sure there is sufficient supply of those products or that the products are, sustainable enough. I mean, otherwise we would go somewhere else to buy our products. And then as a second step, when you have, outlined which KPIs that you will use for this sustainable product, the idea is that you set improvement targets for those KPIs. And we call those targets sustainability performance targets. So in this case, the company might choose a KPI which is the share of sustainable products that they sell. But KPIs can be, anything from emission reduction to gender equality, for example. Let's say, using our example again, this company could perhaps set targets to increase the share of, let's say, fair trade products that they sell. It's of course important that, the targets are ambitious and that they represent a true and, significant improvement compared to the starting point. We often talk about beyond business as usual. So I guess that indicates, that the targets should be set at a stretch. And where new, I guess, and more efforts will be required in order to reach those targets. So the purpose here is simply to create an incentive to improve the sustainability performance. And, of course, many companies have already set targets. They already have a sustainability strategy. And so part of this product is that you incorporate that strategy into, let's say, financial language. And so we are often using already existing targets in order to apply those in a sustainability-linked product.
Yeah, that's really cool that companies can actually use the targets that they've already set anyway for their sustainability strategy to actually get financing. And is it specifically bonds and loans that we're talking about as performance-based products?
Those are, I would say, the two most, common applications. But the thinking around these types of products can be applied in other areas, such as supply chain, for example.
Okay, so Gabriella, hearing you talk about ambition and how important it is for companies to set ambitious goals, what I'm wondering is who determines basically what is ambitious and what isn't, and looking at the whole process of, let's say, a sustainability-linked bond, an SLB, or a sustainability-linked loan, an SLL. I'm just wondering, what does that process look like, and what role does a bank such as SEB or any other bank that helps companies issue these products, what role does that entity play?
So if I start with the first question on ambition level, so the company or the borrower, they will need to outline why their targets are ambitious. And so they can do that by referring to historic performance, for example, so outlining the starting point. They can also, refer to science, let's say emission reduction curves, for example, or whether there is sufficient technology to do a transition, when that technology will take place, what type of investments they need to do in order to reach their targets, and just sort of explaining the efforts that they are putting behind reaching their targets. But then we also have the possibility to ask external experts, so-called second-party opinion providers. And those might be experts in climate or environment, and they are meant to give an independent view on whether the company has chosen relevant KPIs and whether the company has set ambitious targets for those KPIs. Turning to your second question about the role of a bank. So a bank can lend money, so we can be a lender when it comes to a loan. But there is also the opportunity for a company to go to the capital markets and issue a bond. And then there will be investors investing into that bond. But in both cases, we as a bank can act as a advisor or sustainability coordinator, which means collaboration with the company in order to outline the process, have discussions with the company, and help out in articulating their sustainability strategy into financial language and structure the KPIs and the targets for these types of financial products.
Yeah, I understand. And I guess the question that is begging a little bit here, with all of these targets that companies are outlining based on their sustainability strategies, what happens if they don't reach those targets?
Let's start with saying, there are a whole lot of reasons why a company would want to and perhaps also need to improve when it comes to sustainability performance. But, just in the same way as there are market guidelines for the use of proceeds products, there are also market guidelines for the sustainability-linked products. So these guidelines talk about some form of effect as a consequence of either achieving or not achieving the targets. And most often that is, outlined in the way of a penalty on the interest rate or a combination of a penalty and discount. And whether such penalty or discount is triggered, that depends on the outcome of the performance of the KPI in relation to those targets. So basically how well the company is improving on sustainability. Now that impact doesn't need to be, particularly large, and actually it could be structured around something else than the interest. But the idea is that there is some type of effect connected to the result of the performance in relation to the targets.
And I know that you work quite a lot with SLLs here at the bank and SLBs as well. So I'm wondering if you could share with us an example of maybe a recent client case so that we could really see how this whole terminology that we have been discussing so far looks in real life.
Yeah, sure. I could perhaps start by saying that bonds typically come with more public information than loans. So from the bond market, we can take a few examples. But before that, so generally speaking, there are many different types of KPIs which will be relevant for different types of companies out there. And we talk about emission or greenhouse gas emissions as one example. But it could be a focus on supply chain or circular economy or more social aspects like workplace accidents or diversity, gender equality. So the range is really, really large. But perhaps I should mention that one topic that comes up in a lot of these structures is the greenhouse gas emissions. That's a topic which is, important to many companies, across industries, and of course the focus on global warming is very high. Regulators and policymakers are focusing on it, and of course not the least, it's a topic which easily lends itself to numeric reporting. So it's a measurable KPI, which is also one of the requirements in order to set a good KPI. So SEB has helped and collaborated with a number of corporates on the loan markets and bond markets. And it's, a process where we essentially, talk to the companies and help translate their sustainability strategy into financial language. Now, if we take the example of SSAB and Odfjell, so they are two companies which have focused on emissions. So for SSAB, which is a steel producer, in an industry where emissions are high, that's a KPI which seems, a quite natural choice. And the same goes for Odfjell. This is a shipping company. For the transport industry at large, emissions is really one of the true challenges. So also in this instance, it seems like a very relevant KPI. So looking at some other examples, so if we look at H&M, a fashion retailer, they selected the topic of circular economy as one of their KPIs. And they did express that as the share of recycled material that they use. So shifting from, virgin to recycled textile material, of course, that has a positive impact on the environmental footprint. And their target is to go from 2% to a full 30% of recycled material in 2025. And with this target, they are of course, addressing a topic which is, important to all of us and across industries. We need to make sure to safeguard the resources of our planet, such as water, for example, but, also make sure that we are efficient about the use of energy.
So I see how these companies can use products such as SLL or an SLB to demonstrate basically to the whole world, but specifically to the finance community, how ambitious they are when it comes to sustainability. But in addition to this, what I'm wondering is, what are some other pros of performance-based products compared to maybe normal vanilla products or use of proceeds?
So use of proceeds products require that you have certain investments or spend money on green projects or green assets. But not all companies have that type of investments, so they operate in a different way. And so their transition might be more about changing behavior or, reducing the use of certain materials and so on. And the performance-based product or the sustainability-linked product is a good way for companies to engage in sustainable finance. And we need all the contributions that we can get. And so the sustainability-linked product may fit for many other types of companies out there. A sustainable finance product can serve as a tool or a platform for internal knowledge sharing and communications. And that knowledge sharing, takes place across different functions. So, for example, treasury, finance units, the sustainability unit, and such collaboration is typically necessary in order to create this type of product. And of course, you can, use this also as a tool for external communication. So your knowledge sharing with external stakeholders and the finance industry at large. So banks and investors. And that's, of course, important because, we as a society, we need to, take us through the sustainability transition. And the finance industry plays an important role in capital allocation in order to support the financing of this transition. So by engaging in these types of dialogues and processes, there is a knowledge sharing and transfer from different sectors and industry into the finance industry, which I think is very important.
I really like what you said about dialogue. I never thought of it from that perspective, but it's really cool how valuable it can be to just simply talk about these things and see how we can integrate sustainability into the different aspects of not only the way companies work, but our life in general.
Yeah, speaking from a personal point of view, it's of course very rewarding to be able to take part in these types of processes. And, we put the light on the need to create a real change for the climate and the environment, for society, and just to be part of trying to move society in the right direction.
And I can definitely see that there is a whole array of benefits and pros when it comes to performance-based products, but sustainable finance products as a whole as well. But I'm wondering, are there any cons or, maybe difficulties or challenges that are related to issuing such products?
Yeah, I mean, as always, there is another side to the coin here. To mention a couple of things. So, it will of course require more groundwork and preparations to do a sustainability-linked loan or bond than a traditional, loan or bond. But on the other hand, as I just mentioned, the opportunity is there for clear upside. And, if anything, all that preparatory work could create more awareness around important items. Another thing to mention is perhaps that, it can sometimes be quite hard to capture important sustainability topics as, one clearly defined and measurable KPI, which mirrors, the sustainability effects that we're striving for. Now, that doesn't mean that the topic is less important, but perhaps, less suitable for a sustainability-linked loan or bond. And then, as we talked about before, I think we should be humble to the fact that, ambition level of targets could be hard to assess. And in some areas, the development is fast, regardless of whether we're talking about technological development or some other driver for change. We are looking into the future, and with that comes that we don't have all the facts on the table. But we can, of course, be sure that it's important to act now and to make sure that we contribute to driving the change towards a better planet and society.
So, Gabriella, thank you so much for joining me today and providing your insights into these products and this whole market as a whole. Before I let you go, I do want to ask you one more question, and this is a question that I like to ask to all of our guests at the end of the episode. So if you could give one piece of advice to someone who is looking to incorporate sustainability into their work, whether it's in finance or in other areas in business or whatever it may be, what advice would you give them?
Yeah, I think I would like to echo some of the previous guests of this pod. So, all steps count, and many small contributions, will together make up an important contribution. Reach out from where you are sitting. And as I mentioned earlier, a big part of sustainable finance is raising awareness and creating the infrastructure to be able to act. So, without the knowledge, we can't direct our efforts properly. So, But having said that, there is an urgency in taking steps towards a better future and more climate-friendly future. And so I think the expression, don't let the great be the enemy of the good fits particularly well here. We need to embrace all the efforts, small as well as large, and imperfect as well as perfect. So, as long as it contributes to taking us in the right direction, it's a good step. So, I would simply say, reach out to the organization you're part of, or, as a private individual, you can also make impacts, through your choices related to finance or in your everyday life. Share the experiences and the knowledge and get the people around you to pull in the same direction.
That's great advice. I don't even have anything to add to that. Thank you so much, Gabriella, and thank you for joining me here today. As this episode is coming to an end, I do have one more thing to say, and that is that we here at SCB, together with our partners GIZ and a UN initiative page, just launched a big update of our e-learning course called Introduction to Sustainable Finance. It is a completely free, self-paced online course that you can take to learn more about sustainable finance instruments, such as the ones we discussed today, but also so much more about this market that is growing extremely fast. You can find this course on the UNCC eLearn website, which is a UN learning platform. And you do have to create an account there to take the course, and upon completing it, you also receive a UN-issued certificate. If you have trouble finding it yourself on the UNCC eLearn platform, please feel free to email us at nextgenfin@seb.se and we will send you a link. You can also email us with feedback about the podcast or suggestions for topics that you would perhaps like us to cover in the future. I hope to hear from you, but for now, take care, stay healthy, and goodbye.